Hello everyone, good evening. Welcome back to Full Circle Trader. My apologies for posting the video after a very long time. So let's just start the analysis. So we can clearly see that the markets are in a state of great dilemma and confusion. And why am I saying this is basically because after this great gap down, prices were still trying to hold these levels, and that can be seen from this strong bullish reversal bar. So once this bar has formed, the expectations were quite changed, that prices might move above and might close this rising 200 MA. But again, we have a gap down day today. So that tells us that prices are in a state of, this market is in a state of confusion, as prices are just moving up and down. And in my opinion, this confusion will gonna be there for some time, until there will be an uncertainty about the war which is going on between Russia and Ukraine, and there will be uncertainties about the World War III and the nuclear attacks. So all these things, they are building up kind of an environment that people in the markets are not able to decipher. And until and unless the war will get a stop and the picture will get clear, I think we should be very careful in our trading and investing, because there will be the possibility that one day the market will gap up, another day it will gap down by huge points. So so based on what the price action will be on a particular day, we should take the trades according to those patterns. Just clean this up. So as of now, the markets are looking bearish because we are below the 200 MA. We have India VIX, which is close to 30 points, and which is not a comfortable zone. And after this bullish reversal day, we have this gap down, and that is telling us that possibility is that prices might move down and break this support at 16,300. If prices will remain above this support area and will try to hold this, uh, that can give us some bit of some level of confidence that buyers are struggling hard for these levels. And if, like, going forward, we will have a topping tail kind of bar, which is also a failure bar, because it will take out the lows of this gap down day, and but immediately comes back up and close at its high. That would be a picture that will tell us that buyers are strong and they are fighting for these support zone. So in my opinion, as we should be develop the strategy based on how the day is progressing. Is it a bearish day or is it a bullish day? For the holding purposes, for the long-term investing, in my opinion, this is not a very right time. However, you can buy ETFs in small quantities, because we know that sooner or later, when this war will get over, markets will recover from these levels. So that would be a good strategy. But instead of buying stocks directly, ETFs are good options, because buying stocks would be little risky. However, we can take intraday trades and scalp trades based on how the drape develops. So let's jump on to Bank Nifty. Okay, so Bank Nifty is looking even more bearish than the Nifty. It has taken out the low of this gap down day. However, today we have seen that markets were tried to recover, around these areas at the end of the day. However, if you can see this weekly chart, it is close to this support area, which is around 35,900. and they are continuously moving down. So this might be a resting week as it is looking right now. In my opinion, until and unless prices will create a new support at these levels and try to move back up, clear the highs, this market will remain in a bearish mode because the sector is looking bearish. And in my opinion, we can trade the short trades based on the day. However, as I mentioned, that because there are a lot of uncertainties right now in the market, so even if you take the short trades, that should be based on or should be taken on the very strong bearish patterns. And we should not jump on to any trade just based on any kind of gut feeling, which is like that the market has moved down a lot and it will turn to the upside, or we should take the monthly options. We should go long in monthly options contracts because they are down a lot and they will reverse from here. Do not think on those lines, because you never know. Until there is an uncertainty, markets can go down beyond any a sanity level. So do not take trades based on any kind of gut feeling. Just try to trade what you can see in the markets. So if the markets are bearish, they are forming bearish patterns, it would be wise to take the short trades. However, if there are reversals, take the long trades only on at the support levels with strong bullish patterns, and do not jump on trades here and there. That would be very risky at this time. So for tomorrow, let's say if markets open gap up and try to move back up, then they just take care of these levels, because it has created a lot of resistance to the upside. We have a 20 MA downward sloping in the hourly time frame. So let's say prices open gap up and clear these highs. Do not jump on the long trades. Wait for the right bullish patterns. Because there are chances that they might take resistance at 36,300 level and then turn from here. If let's say it gaps up, create a base here, and then try to break this resistance level, that would be the most important level or the optimum levels to go long. However, on the other side, we know that because markets are in a bearish mode, and let's say if prices reverses, we will take the short trades. So at any point, if markets will turn or form these strong bearish patterns, I think that would be a no-brainer at this point in time, because overall there is a bearish scenario developing. And if markets gap down, then we should wait for we should not take trade in the first 15 minutes, because we know that markets are down, but there are chances that markets will gap down and then immediately reverse back up, and then they will try to create some resistance and then again move down. So in case of a gap down scenario, wait for some time, wait for at least first 15 minutes, let the markets create some sort of resistance, then take the short trades. However, if markets gap up and immediately try to return to back to their support levels or downside, that would be a no-brainer in my opinion. So that's it, guys. That's about in today's analysis. I can't assure you that I will be more regular, but I will definitely try to be more regular from now on. And as always, if you have any questions, please ask down below in the comment box. Catch you in the next session. Good night. Bye-bye.